While trading, we assume that we're gonna win 50% of trade and we will lose 50% of trade. This is
Yeah.
assumption that we have to make. So as we will progress with our trades, we will make 50% losses and 50% profits. So we have to know that if our losses gets add up, how much loss we can incur, and if our profits get added up, what will be our profit, right? We have to make
Yeah.
some kind of assumption about that. So here we have to apply little mathematics. You know progressions,
Yeah.
arithmetic progression means arithmetic progression is 1 2 3 4 5 6 7 8 like this. This is arithmetic progression. Then there is geometric progression. 1 2 6 8 10 and forward. Then there are exponential progression. 1 2 4 8 16 and ahead. And finally we have logarithmic progression. 10 100 1000 like this. Do you understand this?
Yeah.
So what is happening here is that here when we are making profits, we are making profit in arithmetic progression, right? But same does not happen during when we take losses. The losses, they happen in geometric progression. Means if you make 10% loss, you will lose all 10% amount, and when you will make 10% profit on it, you won't be making the equal amount back. Are you getting that?
Yeah.
So we have to eliminate that effect while trading, because due to that effect, what we are doing that we will be making arithmetic profits, but our losses will be geometric. So the overall addition will become negative. Are you getting that?
Yes.
So therefore, our first job is to negate that effect. So what we do that, for that we use this position size. So here I have used red color for the thing that we'll be using on major time frame, means our daily chart, and black for our lower time frame, which is our 4-hour chart, right?
Yeah.
So the first, what we say that first step in every analysis process is identification of trend. So here we will use 20, 50, 75 EMA as our setup, and source for EMA setup would be closing price
Yeah.
on daily chart. So here I will add 3 EMA. 1 2 3. Now here is our condition of bullishness. If 25 EMA is above 50 EMA and 50 EMA is above 75 EMA, and the prices has made resistance break, then we are in uptrend. Now we actually can't go back to see when the uptrend started, because there's actually no price move properly visible here. Therefore we will start somewhere from between. Now here we can see that all three are in ascending order, right? Here.
But yeah, when you say that in that case, when you say that the resistance break, for instance, is like on the middle of March, no? Between March and April, you have this higher high. No, between March
March. This is
2000.
March, right?
Yeah, a little bit forward. In the middle of this month. Yeah, the next one. Yeah, there. This is what you consider the resistance breaks, for instance, when it breaks. That's the resistance.
No, this is not. Usually this is not we call resistance. Actually resistance is like this. Suppose your prices are moving like this. This is resistance break. This is resistance break. Now what you see here, it looks like resistance break, but it is not resistance break. It is called correction. Means look at this, like this. Prices move up. 1 2 3 4 and this would be a resistance break. This is not resistance break, this is the type of correction.
Okay, so the resistance break would happen. So the resistance is made.
This is correction.
March.
Okay.
Okay. Yeah. Because I had this question. If you go forward in time, to this year, I saw this condition could like happen, but I wasn't sure. Can you go forward to February, I think, or January this year? If you can move to the right, 1 second. So there, for instance, there isn't any case in here, so we can apply that because there is no the resistance break kind of in
Where is
that case can
resistance break?
happen
Here we
in
don't have resistance break. Here we have support break.
yeah.
Now here suppose if 25 EMA is below 50 EMA and it is below 75 EMA, check for recent support break. Here what we can see here is that here the condition matched, right? 25 EMA is below 50 EMA and 50 EMA is below 75 EMA. Here the condition matched, right? Now we are supposed to see recent support break. So what is recent support? This one. This recent support break, and we got crossovers in descending order, right? Which means we are right now in downtrend.
Okay.
This is
So my question was, for instance, in May, that we have this little like iceberg when it's going a little bit up, and we have the 25 EMA bigger than the 50, bigger than the 75. And yeah, but there is no resistance breaking here.
where you are
Okay,
seeing
no,
here.
it was, no, I'm just kind of thinking in loud because when I have to program that, I have to, so when I put the condition, I don't want to write false conditions.
No, listen. You have actually problems in understanding of support and resistance, right? I think that. Let me show you a few things.
Yeah, maybe better.
First, we assume that the prices are inside West End. Okay, like this.
Okay.
Now, when prices break up here, then most likely you will get all three EMAs in ascending order. It will happen only after the resistance will break, most likely.
Yeah.
Okay, so when you get that all three are in ascending order, then what you are supposed to check is that this resistance has broken or not. So further what we can see that suppose prices came here and they stopped here, right? So this is our new resistance. Now prices came down, then it went up. So for time this doesn't break, we won't say that resistance has broken. Suppose here new resistance forms, right?
Yeah.
And here we get this type of movement. This is what is correction phase. This is not support. Actually, this will be counted as support if we are looking it in a lower time frame, which we will do while trading. But if you are watching this on a trending time frame, then you are not supposed to see it as resistance. You are supposed to see it as correction. So when it will break this level, then and only then we will say that on major time frame the resistance has broken. And while in trading time frame, we will pick our positions from here, from smaller time frame. Are you getting that? This is daily time frame.
Yeah. I'm just trying to visualize that in the graph that we had open.
So here what you can see here, this position here. Let me remove all every drawing. Look at this. This is our resistance. This is our resistance. And this is our resistance. For time this resistance doesn't break, we will not say the resistance has broken. Now since we can't go really back, let's assume that the resistance break happened here. Okay, so here this is our new resistance NS, right? NR.
Yeah.
I will make it black, this one. Now what is condition? As soon as prices close below 30% level, switch to 4-hour time frame, right? So here I will see the Fibonacci retracement levels. So we will draw it close to close. See, here prices closed below 30% level, right?
Yeah.
Let me mark it. Oh, where is the trading? For trading, we have used 100 period weighted moving average
The weighted.
with source low and high.
Yeah.
We have intentionally used this so that we can get buy and stop loss point all together with help of indicators. Okay. So first I will add it here to WMA. Now we will go to 4-hour chart. So this is where our prices came below EMA, right? So this will be our buying position, first buying position, and this will be a stop loss on low of EMA.
Yeah, but you were using the one to the left, no?
What?
Or what I missed. The other ones is closing before, no? The one of the 11th.
One of the 11th. What I didn't understand. What one of the 11th?
If you go a little bit to the left, is this not the first candle? Yeah, that one is not the first candle that.
This is the first
closes.
candle that closed above the HWMA.
Ah, okay. Yeah.
Right?
Yeah. Sure.
So this is the first candle. Do you want me to make it bigger?
No, it's fine.
This is first candle. So after closing, you would take your buy position there, and this will be your stop loss. LWMA as per here.
Yeah.
Check our prices are below LWMA if prices are below 30% level. So here they were already below 30% level, means LWMA, means red one is the line which is LWMA, means.
Yeah.
So prices were below it. So as soon as prices went above HWMA, means high WMA.
Yeah.
And when as soon as prices close above HWMA, set entry point equal to closing price of HW. Closing price means closing price of this candle.
Yeah.
Set stop loss to LWMA. Means whatever will be the value that we will be having on this red WMA line, and we will initiate our buy position on it. Now unfortunately the first position will get your stop loss hit.
Yeah.
Therefore we will try again here. This is the place where you will buy, and this is you will keep your stop loss. First position you will exit on 1.5 as per our risk reward. This will be a long position. This would be a stop loss.
Again, no?
NR is the resistance that we made in higher time frame.
Yeah.
Right?
Okay.
So this is the red line. Can you see my screen? This is the resistance that we marked when we were in daily time frame, right? This is our NR.
Okay. So in that case, this stop loss was hit.
The first stop loss was hit.
Was hit, and then if we follow the strategy, what would we do next? Because I don't think that you put another buy order in there, right?
What? Another what?
By following the document. After the position is exit because it touched the stop loss. it says here, after release of fair position, wait for prices to hit new resistance.
Yes.
So we are not doing another buy.
No, we are not doing another buy.
So if we are following strictly what the documents say, we are now waiting for the price to break the new resistance, right?
Right.
So if you go back to the chart, we were not doing this buy there that you have in the 20th.
What?
We were not doing this operation that you have as a take, as a buy, right? You just say it after it touches the stop loss. This one, if we follow the strategy strictly, we won't be doing that.
What you won't be doing? You won't be buying again?
Yeah, there, no?
No. That's not what I said.
Okay.
Because it is going to, sometimes it is going to hit stop loss. You cannot say that every time you will going to get an exact position. Haven't I told you that we have to assume that 50% of the time we are going to take losses?
No, yeah, but I mean, if we are following strictly the document, so what we would, in that case, we would have taken losses and that's it, we continue. We are not doing this following the strategy, setting up a new buy order in
Okay,
there,
so
right?
you are saying that I was supposed to write here that if the first position hits stop loss, we should take another position, right?
No. I'm asking if what we have to do because the document says that we continue, and you are showing me that we are creating another buy position, and I'm asking what's the
No,
right
you
thing to
have
do.
to create another buying position because your first position got stop loss.
Okay, so then we should add it in the document, right?
What?
Should we add that in the document of the strategy if this is something that it can happen regularly?
Yes, it can happen regularly. Listen, what would have happened is that first we would have taken buy position there and this would be our stop loss. So as you can see,
Yeah.
the prices came below our stop loss and our stop loss got hit.
Yeah,
Right?
yeah. What I'm saying, if we follow the document really strictly, the next action that we will do would be wait until the price break the new resistance.
No,
And
price come above HWMA. We took a
again,
buying position as soon as price came above HWMA. Look, what will happen if prices are going to fall? They are not really going to come back above HWMA.
yeah.
Okay,
We're fine. We're fine
we
then.
are fine. So first position you will release on 1.5 here.
Yeah,
And after release of first position, we will wait for an R to break. So this is our NR.
yeah. So this first position is basically to cover losses, right?
Yes, this position that we book profit here is for the
Yeah,
condition if trade fails. Means
yeah,
we have what we say that partial failure.
yeah.
In case of partial failure, we should not suffer losses. Therefore, we book here partial profit.
Okay.
Right. Now here
Yeah,
your what we say that NR break. Right. NR breaks
yeah,
here. Now on break of NR we have trail SL. As after break we want a new resistance on this line. Right.
yeah. And we keep moving the take profit line, or well, or the stop loss.
So this is
Sorry,
our
the
new
stop loss.
resistance. Right. So when prices close above this resistance, we place our stop loss to both recent higher low. This one.
Yeah,
This will be our new stop loss. Now what happened is that prices moved above and this is our new resistance, right?
yeah,
Now we need break of this resistance, successful break of this resistance.
yeah. And while you are doing that, cannot you think that the next resistance is going to be one earlier?
What? This one.
Yeah, exactly.
Well, there was not enough, what we say, uh, price coming back towards what we say, moving up. We need something like this. So this is not really a very long dip. You can see that.
Yeah. It's just because I have to also control these things.
Yes.
Okay.
Not only
So it
this,
has to
but there
be.
is also other factors involved like this. Sometimes resistance can happen like this.
Yeah.
Okay. So there are situations when the dip will be extremely small to be considered as what we say that the correction actually happened. This is something that we do not consider that actually happened in the correction. We need some kind of movement. This is not even 10% of what we say that the move we are expecting to hear.
Okay. So we take the next high, but after big move, kind of
No, there are
bigger move
situations
than
of
this
two
one.
ways. If
Oh,
this
okay.
situation, look at this. Do you think is less than 30%?
Yeah.
Are you getting that? This is not below
Yeah. Okay.
30%. And here,
Uh,
you see it is below 30%. Actually, what happened is that I have got my eyes trained for that because I'm doing from a lot of time. So
yeah.
sometimes it happens.
Okay.
I didn't really figure out that you won't be getting that.
Yeah, well, that's why I'm asking because what I have to do is to to program that because it's done by code, but I can use this.
Here again, you will see that one problem there. Here, prices came near resistance, touched the new resistance line, and then fall back. In this case, we would not say that the resistance has broken.
Yeah, yeah, that I understand.
That you understand? Okay. So our
Yeah,
first stop loss would be here, right? And our next stop loss would be when this will be broken, right?
yeah,
So here it broke, and our new stop loss would be more recent highest low, means this one.
yeah,
Okay. Now what will happen? Your stop loss will get hit here.
yeah,
Are you getting?
yeah,
And that would be your second profit on your risk. So let's try to increase how much you might get. So here your risk reward would be, how much risk reward we have? 1:19. Or we can say that you will be booking like 10
yeah.
rupees of profit on a risk of 1 rupees, right? This is what we will consider a logarithmic profit. Are you getting?
Yeah,
This is logarithmic profit. So we set your trading in such a way so that you would be booking logarithmic profit, exponential profit or geometric profit, but not the arithmetic profit.
yeah,
Are you getting?
yeah.
This would be your first target.
Yeah. I guess that because the Bitcoin market has been in downtrend, I have to do that in the other way around.
No, in downtrend, you are less likely to get exponential and logarithmic profit. Therefore, I specially avoid trading them. I do not like booking arithmetic profits. There are several trading opportunities where you get arithmetic trading opportunities, but I never enter in them because I
Okay.
don't want to risk my money for smaller profits.
Okay. So in that case, for instance, there won't be any opportunity in the Bitcoin dollar this year so
No,
far.
listen, what happened is that you think that you have to trade every day to make money. It's not like that. You have to make your investing strategy in such a way where your profits should always overpower your losses. There are several trading opportunities. There is no doubt you can find several trading opportunities on chart. But are you willing to take smaller profits for smaller losses? Then you are not going to make big money. Let me show you something. Look at this one. I'll show you. This is a bank nifty trade. This is the asset that I trade regularly. No, actually I took trade here. This is where I took trade, and I was expecting prices to make me geometric profits here, but as I can see that the prices didn't make me any further profits from here, and they went above from here. So what I figured out is that from this, that prices for now are not capable of making me any kind of geometric profit. They will only make me arithmetic profit. That's one reason why I had not taken any of the trades here. This position was also tradable, this position was also tradable, and even this position was also tradable, but I didn't trade them because we know we have to take 50% losses. We have to assume that we will take 50% losses. So suppose I am making 1 rupees profit for 1 rupees loss, so my net total becomes 0. Are you getting that?
Can you explain me again why do you know that you are taking their arithmetic profits and you are not making the other one?
What?
When you say that you are not going to make good profits in there, what's the reason behind? Can you quickly explain again?
Did I tweet you that profit, 3 levels of profit arithmetic, where your profit progresses,
Yeah,
and then there is geometric profit.
yeah. But how do you know that you are not going to make the profit that you want with these kind of situations?
Your second cycle will fail.
Okay.
This is second cycle, and the second cycle failed to deliver me geometric profit.
Okay.
Okay, so
Okay.
fact is that most in downtrend the max profit you can make is a geometric profit. You cannot take exponential or logarithmic profits.
Okay.
For example, here is the another thing I show you. Wait a minute. This is daily chart. What you can see here, the prices are in correction, right? Situation. This is resistance,
Yeah.
and this is what is happening, right? This is our resistance break. So if prices break here, then I will get a buying opportunity here. And after I get buying opportunity from here, the maximum loss potential will be 20%, right? But since this is uptrend, when this resistance will break, I will have chance to make like exponential or logarithmic profit. So if I get to buy this for suppose 500 rupees, my stop loss would be 100 rupees. My arithmetic profit would be 100 rupees. So making 100 rupees for 100 rupees isn't really a good idea, right?
Okay. Yeah.
If I take for a geometric profit, the maximum profit I will make is 75 rupees. 75 no, 150.
Oh, yeah.
100 for 150. Okay. 100 rupee risk, 150 rupees profit.
Okay.
Now if it is supposed to be an exponential level profit, then for every 100 rupees I will make 200 rupees. That sounds in my favor, right?
Yeah.
Now if I am expecting a logarithmic profit on this, then for 500 rupees I can make 5000 rupees in profit. So this trade is worth taking risk. So while trading, we don't really think that every situation is tradable. We think in how much profit we can make on that position. So if I buy it here and if prices start moving up, so what will happen if I get a logarithmic profit, then most likely I might be able to make 2500 rupees profit on risk of 100 rupees. Are you getting that? That's a very big profit.
Yes.
The same kind of situation I did here for you.
Yeah, I know. Do you think there is anything that we can do at these times to book some profit? Because I don't. So we cannot apply this strategy in uptrend. In downtrend, you recommend me not to do it?
No, I'm not saying that do not apply in downtrend. I'm saying that in downtrend, you cannot expect a logarithmic or exponential profit. The max profit you can
Profit.
expect is geometric profit.
Okay.
I intentionally tell people to do not live with the idea that you have to make trade daily. Just select the signals that are going to make you most profit and trade on them. That's the best thing you can do while trading.
Okay.
It doesn't matter how long it takes to deliver result, because at the end of the day your profit will be much bigger. Look at this one. I show you now the chart. This is where I bought 374. This was my buy position, and from there I had 20% or 15% risk from here. Like here was my stop loss, and when I booked profit, I booked a very high profit. Means like here I booked profit 3,100. Take a look on my risk reward ratio. 56 time profit of the risk. For every 1 rupees I make 56 rupees. Are you getting that?
Yeah.
So these kind of profits you can make only in uptrends. That's the reason why I recommend people to trade on uptrends. And do not trade for like smaller profit, arithmetic or geometric profits. Trade for exponential or logarithmic profits.
Okay.
So if you want to trade in what we say stocks, you can trade that. In fact, I have made a course on it if you would like to take on. But here you can do trading whatever you like. So I have to show in downtrend, right?